Bank of England and the European Central Bank both chose to leave interest rates unchanged today. These moves were predicted, but what markets couldn't forecast was what would happen when incoming BOE Chief Mark Carney spoke to the UK Treasury Select Committee, or what questions ECB President Mario Draghi would face at today's ECB press conference, billed as the most exciting in a long time. On the phone with me now is Societe Generale's Kit Juckes. Now, Kit, the Bank of England in today's rate decision said that inflation is likely to rise further in the near term and remain above 2% for the next 2 years. Almost simultaneously, incoming Governor Mark Carney told the Treasury Select Committee that he believes flexible inflation targeting remains the best framework. Despite claiming that no political influence will come to bear on the execution of the BOE's remit, many are now questioning whether Carney's flexible stance will have made him a favourable candidate to Chancellor George Osborne. Is this fair?
I think Osborne will like him. Osborne would like all the help he could get from the MPC in terms of easing monetary policy, because he has nowhere to go with fiscal policy other than more austerity that's going to be unpopular. So he'd love them to throw away their inflation target without actually getting rid of it. So I think he'll have listened to Mr. Carney and be fairly favourable. But I think the reality is Mark Carney was a credible candidate, and he's got the job, and that's fine.
We're also noting some contradictions regarding QE. The BOE has stated that it stands ready to provide additional monetary stimulus if required, while Carney has claimed that returns from QE diminish as the scale of the programme is increased, as shown by the Bank of Canada. Is it any surprise, therefore, that the pound is trading somewhat erratically, and how do you see this moving forward?
The pound has weakened on the back of two things, really, in recent weeks. One is a sense that policymakers in the UK would like to continue rebalancing the economy away from financial services and towards more export-oriented growth, and that a weak pound would help. That's gone some way, although since it sends inflation higher, the market can get itself confused about that. But more than anything else, when Mark Carney talks about wanting to help the economy reach escape velocity, he's contrasted very much with the message that we've been getting from the European Central Bank, who have considered that monetary easing is more or less done now that the crisis has faded, and they're not trying to boost the economy dramatically. So I think the pound's more being driven by events at the Fed and the European Central Bank than anything that's happening in the UK. Although at the margins, the UK policy news has been seen as a reason not to like sterling.
Moving on to the ECB, concerns over a rallying euro had led to some speculation that the ECB would intervene today. While interest rates were left unchanged, did we receive any confirmation as to how harmful the ECB consider a strengthening euro to economic recovery?
We didn't get much, and we got a little bit of gentle steering from Mario Draghi. And I think one thing I have to say is that with interest rates at a low now, the foreign exchange market is reacting, if not overreacting, to any little change in the nuance of the tone from the president of the ECB. So the monthly policy-setting meetings are going to be pretty lively for the foreign exchange market all year, I think. However, a month ago, the ECB indicated that it was finished with easing because the crisis in European financial markets and banking sector was over, and indicated that the day job, fighting inflation, was going to be what the ECB would go back to at this point, but they're not there to do the kind of big boost to the economy that the Fed is doing and that the UK MPC has been trying to do. That sent the euro up. Today, I think what we got was an attempt at putting a lid on the euro, to the extent that he is recognizing that inflationary risks move to the downside as the euro strengthens. So even on his day job of only focusing on inflation, sending the euro too high changes the gauge a bit, and he'll look again at that in the next month. I think that was sufficiently dovish to get people thinking that maybe Mario Draghi doesn't want to say, I'm going to try to help out the weaker economies in Europe by not having the euro too strong, but he didn't want the euro to react as much perhaps as it had done 4 weeks ago. So he's fine-tuning his message. We've stopped easing because the crisis is over, but we're not tightening soon. And of course, if the euro went up too fast, that would have an impact on inflation. So that would have an impact on policy. This is all little tweaks aimed at not seeing the currency move too far.
Mr. Draghi batted away several questions regarding Ireland, saying only that we took note of an action that is being undertaken by the Irish government, considered tantamount to confirming that a deal has been reached regarding the nationalisation of Anglo-Irish Bank. Is this move likely to give the Irish economy the room that it needs to grow?
I think it's going to see us reach an agreement on the nationalisation of one bank, and an attempt, I hope, at getting some kind of fairness across Europe in how policy has been treated through the special measures that have been taken. For Ireland to grow, I think the Irish have done a better job than many other countries in Europe in terms of restoring competitiveness and going through the kind of fiscal austerity that's needed. But the biggest help that Ireland could possibly get would be a more growth-oriented European policy, from fiscal policy through monetary policy, and perhaps a euro that doesn't just go up every day. I think that's what the help they need. If Europe is stuck in recession, I don't think Ireland's going to accelerate away. That would be pretty hard to imagine.
The ECB president also received the anticipated grilling regarding how much he knew of the derivative scandal at Siena's Monte dei Paschi bank and what he did about it in his former capacity as head of Italy's central bank. Does the magnitude of this scandal hold implications for the ECB's future role as a European bank regulator?
I don't think so, in the sense that, you know, it's inevitable that he's quizzed on it. It's inevitable that anybody at the European Central Bank was a central banker around Europe before, so that there's some legacy. But I think it's important to see the European Central Bank as the institution that gets us towards banking union in Europe and regulates at least the big banks in Europe. And he's the head of it, and I don't think this should stand in the way of that happening, and unless someone finds some truly dreadful skeletons in a closet. No, I don't think that the quizzing today indicated anything of that order.
Thanks, Kit. That's all for now, but we'll be back shortly with more exclusive interviews. Goodbye.